I'm Charlotte McLeod with investingnews.com, and here today with me is David Morgan, publisher of the Morgan Report. Thank you so much for being here. Great to have you.
Well, thanks, Charlotte. Seems like it's been a while, so thank you for having me.
It has been a little while. I was checking, and our last interview was back in November, so it's been some time. And we began that conversation talking about gold. And I think what I had asked you is, is it a gold breakout or is it a fake out? And
Mm.
now we have with silver going past $30 per ounce. I think people are wondering the same thing about silver. So I thought I could start by getting your thoughts on that topic.
Great. I think I made the right call on gold, and here's the call on silver. It is a breakout. I have what's called the Morgan Rule. My premium members know it because I use it in some of the updates I do for the membership. But it's not infallible, but it's a high probability. So whenever we get a new level, we look at the market to go above that level. It must go above that level 3 days in a row. It can go below the level during day, but it has to remain above that level on OCO, on close only, which is a trading term. And it needs to be on above average volume. So if you have those things, 3 days in a row, above average volume over a new hurdle, you have about an 85% probability that the trend will continue. That's a very high probability. And it works 100% of the time? No, it works by 85% of the time. So we had that with the $30 level in silver. We got up to, in the last 5 days, traded over 32. Now we're just over 30. 30 is held for the last 2 days, and it could dip below it. I mean, we could see it could go below it. I mean, I admit that we don't know for certain, but we've certainly breached the $30 level significantly enough and for long enough of a time for that to be what I call psychological confirmation as well, which means that people get the idea now that silver's traded at $30.
Okay. I think that provides some really good context on where we're at right now. And looking ahead, with that in mind, what do you think silver's path looks like into 2024? I think we've talked before about how if we get to that 33-ish dollar level and silver can get through there, then there's not a whole lot of resistance. But I would assume we need to see some support established around 30 before we go there.
Yeah. Well, you pay attention to not just my interviews, but all that you do. And I know you do a vast amount of work. And I watch a great deal of your interviews, by the way. That's it. I mean, we're probably going to hit a trading range. We're probably going to trade between 30-ish and 32 for a while, and it'll go back and forth. And this is my best guess. I mean, if you interview me 10 days from now, I might have changed my mind based on new data or some new announcement about more solar panels or something in the silver world. But regardless, normally we'll see a new trading range, and then we'll break through that to the upside. And 33 is not a magic number, but it's a good rule of thumb. As you said, above that, there really is not very much resistance, which means any new buying will take it higher and higher and higher. And what do I expect for the rest of 2024? I'm going to be conservative, Charlotte. I'm going to say I think we'll still be in the 30s and probably in the mid 30s. I don't really think silver is going to be in the 40s by the end of the year. People are making arguments it'll be 50, and it could be. But I'm going to remain conservative. My call for this year, before any real bullishness in silver and gold was just starting to make some pretty good moves, was $2,500 gold and $30 silver. And surprisingly, my silver call is here already, and gold has not quite made it to 2,500. And that isn't like the average price. That's kind of the high range. But again, I hope I'm wrong. I hope gold's well over that, and silver's making new nominal highs for what I wish would happen. But what do I believe will happen? I don't think you're going to see $3,000 gold this year. I don't think you're going to see $40.
Okay. It's good to get those numbers out there. And I think we'll go over to gold in a little bit, but I'll finish up with silver first and ask you a little bit more on that angle. So when we look at what's driving silver right now, I think if people are following these markets, they know that typically gold moves first and then silver will follow. So it's probably pretty easy to say, okay, that's what's happening right now. We have silver following gold. But I'm curious to get your thoughts on what's been driving this move in silver past 30.
Yeah, excellent question. And it's a tough one because silver is acting strong. And yet, if you look at some of the features you would normally expect to show strength, they're not there. What I mean by that is the retail market doesn't believe this move. In fact, I just talked to the third dealer today, and they're getting more sells than buybacks. So a lot of people that bought at 25 with a high premium and they paid 30 or whatever, saying, I could get 30 for it on a sale or 31 or what it is, whatever, and they're out. And so that wouldn't add to, a higher price. In fact, a lot of selling would take the price down. Obviously not doing that. The main factor is two things. The amount of uh, inaccuracies and how much was used in solar last year, I think, is weighing on the solar industry. And so there's that. And then on top of that, the futures market continues to go higher and higher. And a lot of that has to do with the Shanghai Futures Exchange, the SFE, because there's an arbitrage available between the price of silver on the COMEX and the price of silver in Shanghai. And it's significant. Now, it costs to play that ARB in the physical world. You've got to buy it at the COMEX, and now you got a lower price, maybe $2 an ounce, $3 an ounce. That's a heck of a spread, but now you've got to ship it or take an airplane or something. So there's transportation costs to get the physical there. So it's done synthetically, which means in the paper markets. But the point being is they are setting records in the Shanghai Futures Exchange, and most people don't pay attention to it or know where to look. And I was a little hesitant to jump on the bandwagon. Ross Norman was about the first one to write about it. And I, get a lot of information from a lot of different sources, and some are more trustworthy than others, blah, blah. But this was okay. So I started looking at hard, and yeah, it's been verified time and time again the last week or two that there's something going on. And I'll stick my neck out. I was conservative on the last segment. I'll be a little more bold this time. If the Chinese retail market has caught on to the silver market, watch out. I mean, you've got 1.4 billion people. Now, not all of those people are going to be silver investors, I realize. But the point is, there's a lot of Chinese, and they love the markets. So that's really the driver: solar and Chinese, and also people in the know, people that get the studies on silver that really look at the market hard and see, what the future looks like as far as the major trends. The major trends are more bullish than I've seen in a long time. It kind of reminds me of when you and I first met back in the early days. INN had just started for a year or two. You were doing all the circuits for all the resources, and silver, went from 5 up to 50 from 2003 to 2011, and gold went from 252 up to 2000 in 2011. I mean, we had a pretty good run there for about a decade where, every time we spoke, the metals were higher than they were the last time or close to it. We had some ebbs and flows in there. We had the financial crash and all that. I'm not I don't want to paint an inaccurate picture, but you know what I'm saying. Looks to me like we're there again, that we're in the early phases of a major bull market.
Okay, I think that was very helpful for me. I'm glad that you brought up what's going on in the Chinese market because I had seen you sending out some tweets on what's happening there, and I really looked at it and I thought, okay, I really need this explained. So that helps. I have one follow-up question. So this is in the futures exchange. So who are these buyers? Do we know who that is? I think you mentioned we're waiting for that retail crowd to potentially come in. But do we have a picture of who's doing this?
Somewhat. I mean, the futures markets are for professionals. I mean, there's always the people that get a futures account and trade one or two contracts or 10 or maybe 20, depending on how, well heeled they are and what kind of risk capital they manage. But it's mostly, especially in the softs and the ags, but in the metals as well. It's the producers, it's the farmers that farm wheat that are in there. But these are conglomerates. I mean, there's some farmers that'll pick up the phone and have a futures contract and hedge their own, field. That's true as well. But it's the professionals, and so that's the same thing in China. And what are they doing there is not only playing the market, but they may be there to hedge a position or to lock in a price for future delivery that is lower than, let's say, a price, 6 months from now for industrial purposes. So it could be, I'm not saying would be, but could be potentially hazardous to the physical market, which of course I think at some point will drive this market away from the papers, and because you cannot put a contract of silver into a solar panel, you've got to put about 20 grams of silver in each. So I'm very, I won't be overly bullish, but the market speaks loudly, and we are entering a new time frame and a new, I'd say, decade where we will have probably a deficit running, like we talked about before the show.
Yeah, so we've going on in demand here, but as you mentioned before we turned the camera on, we were going over supply, and you had a really interesting chart that I'll link in the video description for anybody who wants to follow along when we talk about that. But you were essentially saying on the supply side, it looks like it's really peaked for at least the foreseeable future. So maybe you could go over that chart and what you see there.
Yeah, this comes from Matt Watson, and I was introduced to Matt by the Silver Institute, so I want to give him credit. It's his graph. Uh, but what he shows is that the amount of mined silver and recycled silver remains flat for several years going forward, and I think he's right based on the fact that we've had a flat silver supply for the last decade or so. It's ebbed and flowed, but it's stayed within a few percent. And recycling, the same thing. So if you take that projection as being a valid assumption or near valid, and then you look at what the demand side is, and it continues to increase, and we know that has been significant, especially in solar. And solar just keeps getting bigger and bigger. Quick example I wrote in the Morgan Report a couple months ago, Charlotte. Oh, you are sitting down, good. Because the solar farm that's being put together in India is the size of 5 Paris, France. So think of the size of Paris and multiply it by 5, and that's the size of the solar farm. So that's a significant amount of silver. I guess again, when you think it's 20 grams per solar panel, how many solar panels are we talking about? So when we saw that big import into India, I would say that that was all or most all of it was for this solar farm. And that is a trend. More and more of this, go green, be green, alternative energy, all of that portends a lot more use in silver, and maybe more than these people understand is really available. So it's a quite bullish situation.
It really does sound like it. And so I think we've covered a good number of the bases in silver. And I want to make sure we don't forget about gold as well, although how could we ever forget about gold? So of course, gold has been reaching record highs in 2024. And interestingly, I was hearing for quite a long time, gold will really get going when the Fed cuts rates or, when the stock market corrects. And gold has gotten moving without either of those things really happening. So curious to get your take on what's going on with gold. We've talked about the importance of central banks driving gold in the past.
It's that is a great question, and I've really thought about that more and more and more. And stock, first of all, gold moves opposite the stock market. Does it move opposite the US dollar? Yes, but it's actually more inversely correlated to the stock market. So now let's think about that. The stock market's been making new highs, and yet gold's been making. If they're opposite, and they are, that's correlation. I mean, not 100%. Nothing's correlated 100%. That says that gold is really strong because normally in a strong stock market, it doesn't do this well. So even though the price is nominally high, and that's good, it's probably not nearly as high as it would be in a weak stock market environment. On the interest rate things, I'm a bit of a maverick. Really, to me, and time has shown this, interest rates do matter. Absolutely. It's the cost of what we call money. But you really don't get it to affect gold until the interest rate is equal to or greater than the true inflation rate. And the true inflation rate, basis John Williams, shadowstats.com, I don't know the number. I listened to a recent interview, forget the number. I'll say 10%. And we're using a 5.5% yield on the bond right now on the near term. And so cutting interest rates will help the gold market. They cut them here. But the way to really, move gold down would be to move interest rates even higher, but they're not. Could interest rates move higher? I'll be maverick again and say they could, but nothing monumental in my view. I mean, it could go a half of, 500 basis points. Could it go full basis point and another percent higher? Could. Will it get to 10%? I really doubt it because there's too many variables that depend on the cost of money, and one of them is the interest on the national debt. You just get it too high, you'll collapse the economy. So the Fed's in a rock and a hard place, and gold senses that, and it's forecasting higher prices, which really isn't higher price. I mean, it's a higher price, but what it really means is the dollar is losing purchasing power because gold is a constant. An ounce of gold is an ounce of gold. That doesn't change. It changes the price. So why is the price changing? Because the dollar is deteriorating. And I think that's inevitable, regardless of what the Fed does with interest rates. And it's what I and so many others have predicted that you interview, and you've gotten some really bright people throughout the years and continue to interview them. But it's a really simple equation. All fiat fails. And does the dollar go to zero and it's going to go away? And all? No, the dollar will be here. But what's the purchasing power going to be? And the problem is the deterioration of the dollar is accelerating. And that's what scares people.
Right. And, speaking a little bit more about the economic outlook in the US, before 2024 began, you were telling me, we've been in a recession. We're in a recession right now. And 2024 could be a year where we head even toward a depression. So we've made it about 5 months into the year. So I wanted to get your updated take on that situation.
Well, I still will maintain that. Uh, and, it's hard to define a depression. But let's just take the fast food industry. I mean, you take your McDonald's, your Hardee's, your Wendy's. I don't know all the ones in Canada. I've been there many times, but I usually don't get fast food restaurants when I'm there. But the point is, people frequented those places because they were cheap, they were affordable, they were fast. All that's gone away. If you look at the statistics in the United States, and I'm sure it's everywhere, these restaurants are hurting now because they cost so much. And that's just another red flag that I'm right. So people will do what? It's going to cost them $11 for a Happy Meal, or then they're going to quit going and they're going to buy food at the grocery store and make their own burgers at home or whatever. So that's just a cutesy point, but it's a valid one. I mean, it's a big industry. Think of how many billions of hamburgers McDonald's sells every year worldwide. So there's a lot going on that people don't talk about. Um, Not that that's a major talking point, but they refuse to see it. My statement that I've made to almost all the interviews is that the average person will recognize that we are in a recession at least, and that's where they see it. They see that what used to cost them X is 200% higher 5 years later. That's McDonald's. I just got that statistic before our show. That's a very significant increase in prices in a 5 year time. So that's just an example, but it's not across everything, but that's the trend. And that's the problem. So people start to fear how much it's going to accelerate in the future because it's accelerated more rapidly. So they start to become fearful that I better spend this money now because 6 months from now, my McDonald's that I'm only going to once a month now instead of twice a week is going to cost me so much that they start to look for alternatives, not only where they buy their food, but where their savings are. if they have any.
Yeah, I can definitely agree with the fast food example. Just for a small anecdote, I was in Seattle this past weekend. And of course, normally I live in Vancouver. So we went on this visit, and the food prices anywhere we would go were so expensive. And of course, for us, it's translating it from Canadian into American dollars. So even worse. So that was the pain was definitely real there. And I think the other book that I wanted to ask you about. So all of this is going on, and of course we're quickly approaching the election in the US. And I've heard a lot of commentary, I think, from people on both sides of the aisle, kind of looking toward after the vote happens and the potential turmoil that could happen there. So I thought I would ask you your thoughts on that as well.
Thank you. I'm going to digress, but I'll answer your question. Years ago, when we had the early silver summits, and we used to have them in the Silver Valley or in Coeur d'Alene, I used to do a workshop the day before usually. And at this particular one, it was pre high tech. I mean, we still have computers and the internet, but I brought a whiteboard out and I wrote the word trust on the top of it and I circled it. And I said, this is why the system will break apart because of lack of trust. And I was talking primarily about trust in the financial markets, trust of what a dollar is worth, trust of the bond market long term, trust of the equity market, trust of financial statements. But really now it's gotten into the political class, and it's trust of the vote, who counts the vote, who's telling the we all know politicians lie. If you don't know, you're not an adult. But it's now, do we trust who won the election? And that's a sad state of affairs for everyone because that is what it points to potentially, which means we could see um, some uprising, whatever that means, dependent on either case, X or Y winning the election. Y says no, and or X says no, depending on what the outcome is, and that's very sad, and it's very disheartening to the system that's been developed for so long. So I'm not predicting that, but I'm not ruling it out either. I think that we are in a disarray on a global basis. 80% of the population of the planet votes in a new leader this year. I wrote about that in the Morgan Report. So there's a lot of turmoil potentially. You're seeing people that come to power that you might not have expected just a few years back. You see what's happened in Argentina with someone that's bent pretty much toward the Austrian School of Economics and anti-funny money and some interesting things you hear from some of the people that you interview. But it's got to be trust, and if you've lost trust, as I said in the financial example, that's when the system really starts to have problems. So we have problems not only in the markets, we have trouble in the political markets or political system as well, which I don't like to report, but I mean, that's our job, yours and mine, and that's the way I see it.
I think that also feeds well into my next question, which is going to be, there's all this turmoil, there's a lot of noise out there. Are there things that you see people missing because of all this noise that's going on?
Well, I think you can get lost in the noise. I think that the real stability of the American average person, whatever that is a much more common sense, grounded, self assured, go with the flow kind of, I can take the hard times, just tell me the truth about it individual. I mean, the rugged individualism, which was synonymous with the American way back in the beginning. I think there's more of that that still exists than we see because the media has such a grip on the mindset that you have a very small percentage of people and it's owned by a very small set of people broadcasting the same message over and over and over. And that's almost a kind of a mind control. So even though they might be rah, 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 sis, boom, bah, that, this is like such and such, I think a lot of people just don't buy into the propaganda. I think there's a much more awareness of the economy's deteriorating. Look at what a crappy meal cost me. And this political rhetoric has gone too far. They push the propaganda the point where I can't even believe it. They're so wrong, or their message is so inaccurate. So that's really good for us because we get to, use our common sense, use discernment, and realize, yeah, things are costing more. I got to work harder to stay in place, but I can do it, or I will do it, or I'm going to figure out a way to do it. And I'm not paying as much attention to the propaganda because these people aren't doing us any favors, no matter who's in office. And I think that's really a good thing. I mean, my take, of course, I'm very libertarian, as you know, but it used to be an expression you don't hear anymore, but those who govern least govern best. And so, give it back to us. Get out of our way. Let us accomplish what we can. Quit taxing us so hard. Let us be free and let us produce and get off our backs. And that's not just America, that's Canadians, that's South America, that's just about everywhere.
Okay, I think this has been very enlightening for me as usual, and I think it's a good note to wrap up on. But before I let you go, I'll just ask if there's any final thoughts that you would want to leave people with.
Well, I just a little bit of a self promotion. There's a lot of people that are still on the fence that haven't taken action. So I'm offering something I haven't done, experimenting with it. So if you go to themorganreport.com, I'm giving a half-hour consultation with me personally, not one of the staff. And you can have a chat with me to ask me anything about, finance, the metals, resource companies, battery metals, rare earth elements, whatever it is. And I will do my best to help you. And you'll be signed up for the premium service after the conversation. If you decide that the reports aren't for you, you have 60 days to decide. So you can go in, see all the companies I recommend, read my editorials, look at the work that the others provide. By the way, the In Gold We Trust book just came out, and one of the guys that works for me actually wrote the silver section. So, we're kind of no nonsense people. I mean, I do have a slight sense of humor. You see me laugh, but point being, we're pretty serious about what we do here. And so, if you decided you didn't like it, you would get a full refund, and you would still have that conversation with me. So, I'm trying it again as an experiment to try to get people that are new or coming back in the sector the benefit to get, let's say, kicked off on the right foot, so that they have some confidence in what they're doing and why they're doing it, and what the best choices are.
That's great. I think that's the perfect time right now to do something like that. So thank you very much for coming on to talk about silver and gold in the markets. This is really helpful.
Thank you, Charlotte, for having me.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is David Morgan with the Morgan Report. Thank you for watching. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.